But traders at UBA say investors are sticking with long-dated bills. However, only few trades are consummated due to the widespread between bids and offers. Chuka Nwachukwu, head of asset liability and management and balance sheet management at UBA, joins me now for more market updates. Chuka, thank you for taking the time out to join us today.
Thank you, sir.
I'll bring us up to speed, and of course, this favorite part of the yield curve for investors at the moment.
Like you said in your introductory statement, the market has been characterized by illiquidity in the system. We saw the system hasn't recovered from the 770 billion bond settlements of last week, and so it has continued this week. We saw a little bit of trading, or especially on the T-bill side, no thanks to the NT-bill auction today, where we have about 264 billion on offer. The last time we had the NT-bill auction was on the 8th of this month, where about 217 billion was on offer, and then about twice as that was sold. So we've seen that the illiquidity in the system is playing a major role in the in trading. That has affected what has happened so far this week.
How do you see this situation changing? What could be the catalyst if anything does change?
Yeah, well, the catalyst is if FAC comes in, which we expect to come in either today or tomorrow, and that will bring in a lot of respite into the system. Other than that, we don't see any liquidity coming in this week at all, and then the system will continue to be tight.
And just out of curiosity, how is the market? I mean, is the market paying any attention to the elections? We have seen a bit of repositioning at the equities market, based on the elections. But does that happen? Is that happening at the fixed income market?
The fixed income market actually has been stable. It hasn't really, the election activity hasn't really affected it. But though, just like every other thing in the system, just like every other thing in the economy, there's a bit of calmness. Everybody is just quiet, taking things easy. And so I guess also, apart from the liquidity, it's also one of the things that's making the market a bit calm. So really, there isn't much on the side of fixed income market as regards the election.
Well, at a time like this, uncertainty is a big issue for investors, particularly, I'll speak again for the equities investors. But then for the fixed income market, of course, in terms of going forward, the activities of the DMO, how much will be borrowed, how the budget deficits will be addressed, etc. I guess that's still up in the air because we need a new government to come in and, of course, begin to make policies and decisions that would affect that. So how much of that is the market thinking about in terms of that word uncertainty?
Yeah, I think that the DMO has actually has been quite active in terms of aggressive, rather, in terms of borrowing. You saw the last bond auction where well over 800 billion was sold as against 360. I mean, even if whatever happens on Saturday as regard the election, the government will still carry on until May 29. And so the activities of government will still continue. The DMO will still continue to play its own part regarding borrowing from the government. But I think that on the inside of the investors, they will be cautious. We probably will not see the aggressiveness we will see, if the government, if the new government comes in. And again, even if the new government comes in, it will probably take till like the third quarter of this year for stability and normalization to take place. So it's still a bit of uncertainty between now and probably the third quarter of this year.
All right. What can you tell us in terms of what we can expect for the rest of the week? And also the I&E window, that's an Forex market. What kind of activities are we seeing?
Let me take the I&E first. On the I&E window, we saw a bit of appreciation. It's currently trading at 461.32 from 461.52 it closed yesterday. So that market has been, should I use the word stable, or it has just remained the way it is. For the rest of the week, we expect that FAC comes in today, tomorrow. That will ease the liquidity pressure. On the side of T-bills and bond, we expect that the T-bill auction of today, we expect to see a bit of an increase in the yield, probably let's say around 3 to 3.5%. If that happens, then but that's currently where the T-bill 1 year is actually currently trading. If that happens, then the market will follow that pattern. On the bond side, we expect to see a bit of sell-off. That's what we've seen since Monday. So we see a bit of sell-off. The reason being that people are just trying to create liquidity by selling their short end of the curve, around especially the 2026 and 2028 bonds. So by and large, this week we expect to see mixed reaction, especially if the fact did not come in today. But if it comes in today, then we expect to see a bullish sentiment going into the rest of the week.
All right, and one final question. I know that this might be a bit of a tricky one for you, because when it comes to the FX market, we don't see much traction. We all know that there's always a supply problem, for obvious reasons. But going beyond May 29, when we do get a new government, just looking at some of the economic the manifestos of some of course, the front-runner candidates. And we've had some discussions, with some of their, spokespeople, and they've told us that, look, one or two of them have told us that when it comes to the issue of the currency, we could see an alignment in terms of closing up or removing, as it were, the multiple exchange rate windows. So I'm just curious, so if that does happen, so let's just speak hypothetically now. If that does happen going forward, what does that mean for the FX? What kind of conversations will you and I hopefully be having about the naira?
I think that basically if you look at the economic manifesto of the majority of the candidates, you find out that some of them are a bit dovish, some are a bit hawkish, but I think the majority of them are dovish in the sense that they want to gradually take the exchange rate, and then as well as also trying to bring in a lot of stimulus into the economy in a gradual process. When you talk of the multiple exchange rate, I think that's what some of them has kicked against, and then it would be nice to see how they are going to streamline the exchange rate to one single exchange rate, and that if that happened, it would be quite interesting. But again, we should also don't forget that most of the things that affect our exchange rate is not just on the physical, just on the monetary side, it's also on the physical side. So your guest earlier was talking about the oil production. So if we are not able to tighten up that end, and we are not able to save enough, especially as regards the reserve, then we might still continue to have this problem, even if the exchange rate is streamlined to one single exchange rate.